What's up, guys? Welcome back to my personal finance channel. My name is Kyle DePepe, and today we're going to be talking about why Bitcoin is crashing. Well, not today though, because today it's actually up 10%, but it's still off of the highs of 58,000. So either way, let's get into it. Alright, so if you're new to the channel, please hit that subscribe button and give this video a thumbs up if you're enjoying the content. But Bitcoin had a terrible week last week. However, so did the stock market. And a lot of people would say that, people buy Bitcoin as a hedge against inflation or just traditional assets. However, I would say that the two right now are very correlated. And I would say that because they're correlated in the sense that the government is just printing money, handing out stimulus checks, all of that stuff, right? The government, the Fed, it's just pumping money into the economy. And what are people doing with that? Well, the people that don't need it for everyday rent, utility bills, groceries, whatever it is, they're taking that money and investing it. They're buying stocks, they're buying Bitcoin, they're buying all of those other assets. And because of this, all of these prices are now sort of seeing inflationary prices. So the idea is there's more and more people that have money, so they can afford these assets at a higher price. So I think something that stuck to me that was really interesting is it's not necessarily that houses are increasing in value or stocks are increasing in value. It's just that the dollar's being devalued, or they're just printing a ton of it, and so it's worth less, which means that the US dollar amount has to be more for that same valuation. So we're not really seeing inflation sort of trickle down to everyday goods like a carton of milk or eggs or whatever it is, but it is flowing through to Bitcoin and stock prices as well as home prices. And with this extra cash in the system and low interest rates, people are utilizing that to buy more and more assets, therefore driving prices up. So you kind of have to be careful. It's a weird environment, but obviously take full advantage of it. If you can invest in assets right now, they've grown so much and they may continue to do so as they keep handing out stimulus checks or the Fed keeps buying different assets in the market, whether it's corporate bonds or maybe they announce something in the future. But because of this, it's leading to these crazy price run-ups in a lot of stocks, Bitcoin, and other cryptocurrencies. So recently it started crashing, right? The bond rate started going up last week, and when this happened, the stock market crashed. Well, it didn't crash, but it started selling off, and same thing with Bitcoin. Bitcoin made another run up to new highs, went to over $58,000, and then it collapsed down to, I think, a low of like 43 and change yesterday or the day before. And a lot of people were getting worried, like, oh, was that the top of Bitcoin? Is it going to zero? Blah, blah, blah. And I would say, no, it's probably panic selling. It's a lot of correlation to the stock market. People are losing money in the stock market, so then they take profits in Bitcoin, right? They take profits wherever they can because they want to go to cash because they're scared. So if you're a long-term investor, then the goal here is just to ignore the price. Bitcoin is obviously much more volatile than a lot of other assets, and especially stocks. Now, let's ignore GameStop for a little bit because obviously that's super volatile. So in December, Bitcoin was trading at like $16,000, $17,000. And just last week, it hit a high of over $58,000. That is a crazy run up. But also remember that, 3-4 weeks ago, Bitcoin had hit an all-time high of over $42,000. Shortly after that, it collapsed down to around $30,000. That was almost a 30% pullback. When we saw that, people were getting worried and panicked and all that stuff, just like right now. That was literally like 3-4 weeks ago. Then it consolidated in the $30,000 range. Tesla, Elon Musk came out and said they're buying $1.5 billion worth of Bitcoin. There were some other articles that came out as well. Bitcoin went from like 38,000 at that time and just rallied to new highs and then just kept going up to $58,000. And then we had another correction and we went down, 25 to 28% again. Very similar as last time, right? A similar down move, because we can't just go straight up forever, right? It doesn't make sense. People are gonna take profits. Someone's gonna sell and realize those gains and try to buy back in at a lower price. So this pullback, I wouldn't say that Bitcoin's crashing. It's just trading how it almost normally does. 3 to 4 weeks ago, this exact same thing happened. So you have to kind of keep a longer term mindset. At least that's what I'm trying to do. Now again, if Bitcoin goes to 100K in the next 2 to 3 months, I might take some off the table just to realize some gains and protect myself from another potential 50, 60, 70% correction like we've had in 2018, like we've had, back in like 2013, and like there was, I think, one other time before that, where there were huge drops in the price of Bitcoin before making new highs later on. So those are some things to sort of think about. However, I would also say that something different about this time is that it's not as much retail money. And the reason people are saying that is because if you look at whale wallet sizes, you see larger holdings of Bitcoin wallets, and not a lot of retail people have that much money to buy that much Bitcoin. So if you see new larger wallets, you realize that it's institutional buyers or very rich individuals potentially that are buying Bitcoin. And because of this, you're probably not going to see the same kind of panic selling that we saw in 2018. So we could see a longer run up or a higher run up before getting a large correction again. So just because we have a 25 to 30% pullback, you have to remember that 43,000 is still higher than that $42,000 high we had 3 to 4 weeks ago, where we corrected from there. So I wouldn't really say we're crashing yet. If we fall below 40,000, you could potentially see more panic selling or more people taking profits before it goes lower and trying to buy back in. But as long as we hold that $40,000 level, it still seems pretty bullish to me. And even then, there's a bunch of support levels now that we've made these new highs, and you have new institutional and I guess rich individuals buying, such as Michael Saylor with MicroStrategy. You have Elon Musk coming out. You have people like Kevin O'Leary from Shark Tank, who once said Bitcoin was garbage, coming out saying he's now allocated 3% of his portfolio to Bitcoin, which is very interesting. A guy as conservative as him has come out and said he bought some Bitcoin. Now, he hates the volatility, but you have to remember it's just that. It's not necessarily that Bitcoin's crashing, it's that it's volatile. It goes up $10,000 in a day or two. It's not gonna just sit there and stay at that level. It's gonna have some fluctuations. So I wouldn't think of it so much as crashing. However, just be mindful that there is still some correlation to the stock market, in the sense that if the stock market starts selling off, people might realize some of their gains from Bitcoin so they can hold on to some cash, or use that to potentially buy back some stocks, or they might use stocks to buy back Bitcoin, who knows? But the point is, you have to keep that long-term mentality, and Bitcoin has obviously proven that that roughly 4-year halving cycle is very true. So right now, we're in like the, I guess, second year of that halving cycle, and we could see another major pullback, but we might also see a much larger run-up before then. So keep that longer-term mindset. Don't panic every time that Bitcoin drops 20 to 30%, because that's just kind of part of how Bitcoin trades. But be careful out there. You know, put in as much money as you're willing to lose. That's how I try to look at it. That way, if it does have an 80% correction, you can hold through the next, 1 to 2 years before that next halving cycle. And then when it has that next run up, you'll be ready for it to go to $100,000, $200,000, $300,000. Meanwhile, you can slowly dollar cost average in, acquire more Bitcoin, more Ethereum, more whatever it is that you're trading, and hopefully can hold through those bear markets. But that's kind of the key. Keep that longer term picture. And I don't think that Bitcoin is necessarily crashing. I think that we had a healthy correction. We might consolidate in the $40,000, low $50,000 range. But as soon as we get some more good news, such as another company like Apple, that would be awesome if they came out and said they were buying some Bitcoin. We might just see a push higher from here. So I'm holding. I haven't sold anything. I'm actually, well, I guess I'm not buying more because all my cash is already in Bitcoin, but that's why I bought mining rigs, because mining allows me to accumulate and acquire more and more of these tokens over time. I mine Ethereum, and then I can sell some of that Ethereum to buy Bitcoin, Cardano, whatever it is, any other token that I please. So for me, I thought it was a great investment to not only just buy Bitcoin and Ethereum, but also diversify by buying some mining rigs. That way I can accumulate tokens over time, and it's not just a fixed one-time investment. Either way, I hope this video was helpful. If it was, please give it a thumbs up, subscribe to the channel. Until next time, guys, thanks for watching.